OR stock is down, with Q2 25 earnings below expectations. Hello and welcome to Insight AI Brief Setai. Today we're going to talk about OR, but before we get started, please remember to like, share, and subscribe. So today we're doing a deep dive into OR, that's PTT Oil and Retail Business, looking at their recent performance and what's coming up next. We've got a bunch of reports here, analyst takes, OR's own financials, basically trying to pull out the key stuff for you. Our goal, figure out what happened in Q2 2025, what their plans are now, and how the market's feeling about the stock. And just a quick note for everyone listening internationally, when we say 2568, that's the Thai Buddhist calendar year equivalent to 2025 in the Gregorian calendar. Okay, let's jump right in. OR's Q2 2025 performance had definitely raised some eyebrows. The headline number was a net profit of 2.2 billion Thai baht. Seems like a decent number, but what's the real story behind it?
Well, that 2.2 billion figure, and it really needs some context. On its own, okay, but it's actually down 12% compared to the same quarter last year, year over year.
12% YOR.
Okay. And maybe more strikingly, it's down a huge 49% from just the previous quarter, Q1, quarter over quarter.
Wow, 49%. That's substantial.
It is. And it wasn't just a slight miss against forecasts. It was well below what the market expected, about 11% short.
Yeah.
And analysts, even further off, missed their consensus by around 14%. That kind of gap definitely signals something's up.
Okay, so a really significant drop, especially QOQ. Let's unpack this. What were the main things driving these lower than expected numbers?
The biggest single factor, really, was a sharp fall in their average gross profit per liter, the GBletter.
Ah, the margin on fuel.
Exactly. That's a key metric for them. It dropped to just 0.85 Thai baht per liter in Q2. Now compare that. In Q1 this year, it was 1.02 baht. In Q2 last year, it was 0.90 baht.
So a steady decline there. Why the drop?
It mostly comes down to the volatility in global oil prices, just really unpredictable swings, and that squeezes their margins directly. But that wasn't the whole story. There were other things too.
Like what?
Well, compared to last year, they also recognized some foreign exchange losses, FX losses, that hit the Yo-Wei comparison. And then looking quarter over quarter, there was a pretty typical seasonal decrease in overall oil sales volume.
Right, the seasonal effect.
Yeah, and that impacted their mobility and global business segments. Overall, volume was sort of flat year over year, but down 5% compared to Q1, so 6.4 billion liters. And drilling down a bit, the commercial market sales, they took a bigger hit, down 10% QOQ.
Why was that?
They're pointing to the really competitive aviation fuel market, plus it being the low travel season.
Okay. Any bright spots in sales?
Actually, yes. The retail market, people filling up at the pump, that still showed decent growth, up 3.7% quarter over quarter. So some resilience there with regular consumers.
Okay, so you've got falling margins, FX losses, lower commercial volume, quite a few headwinds. Was there anything positive in the mix? Any silver linings that maybe softened the blow a bit?
There was one thing, yeah. Or recognize a reversal of an allowance for expected credit loss, ECL.
An accounting adjustment.
Essentially, yes. It helped offset some of the negative impact from the falling margins and volumes we talked about. It's a smaller detail, but it shows some, let's say, internal financial management helping out. And, if we pull back from just Q2 and look at the whole first half of 2025, the picture gets a bit more nuanced.
How so?
Well, for the first 6 months, total sales and service revenue was about 350 billion baht. That's down 3.4% from last year.
Okay, still down.
But out. And this is interesting. Their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, that actually ticked up slightly. It came in at 11 billion baht, which is up 0.2% year over year.
Ah, so core operational earnings held up better.
Exactly. And that flowed through to the bottom line for the half year. Net profit for H1 2025 was 6.6 billion baht, and that figure is actually up 5.6% compared to the first half of last year.
That is fascinating. A really rough Q2, but the first half still shows growth in net profit and resilience in EBITDA. So what does this mean for you, our listener? How should you interpret this mix? And what about the earnings per share for the half year?
Well, I think what it tells you is that even with that Q2 shock, there's an underlying ability within OR to manage costs and generate earnings, especially seen in that EBITDA figure. It suggests there are other businesses, the non-fuel parts, maybe cost controls, are helping absorb some of the oil price volatility.
Makes sense. And the EPS.
For the first half of 2025, the earnings per share, EPS, works out to 0.55 Thai baht. And that EPS figure, it's a fundamental measure of profitability per share, a key number for investors assessing the company's health.
Okay, so that's the look back. Let's shift gears and look ahead. What's the outlook for Q3 2025? Are things expected to get easier, or are there more challenges?
The expectation seems to be for continued headwinds, unfortunately. For Q3, OR anticipates likely lower oil sales volume again.
Why is that?
It's largely seasonal. Reduced demand during the rainy season here in Thailand. It's a pretty typical pattern, even for big players.
Right, the weather effect again. Anything else?
There's also a potential geopolitical factor they're watching. The Thai-Cambodian conflict. It's possible this could lead to a drop in oil sales over in Cambodia.
How significant is Cambodia for OR?
It's not huge in the grand scheme of things. Cambodian operations contribute maybe around 5% of OR's total EBITDA, something like 800 to 900 million base a year. And most of that is through a franchise model, but still, it's another potential negative pressure point they need to manage.
Okay, so near-term challenges remain. Beyond Q3, though, what about the bigger picture? What are OR's broader strategic plans? How are they trying to drive growth long-term, especially with, everything changing in energy?
Yeah, they're definitely not just sitting still. A huge focus is the continued development and expansion of their lifestyle business segment. That's been a real bright spot.
You mean like Cafe Amazon?
Exactly. Cafe Amazon is a powerhouse for them. In Q2 alone, they sold over 107 million cups of coffee. Yeah, and that's up nearly 5% from last year. A lot of that growth is just driven by opening more branches. They now have something like 4,547 Cafe Amazon branches, both in Thailand and internationally.
So diversifying away from just fuel.
Precisely.
Yeah.
It's about building different revenue streams. And they're innovating within that space too. They launched a premium coffee line, Amazon Premium Selected Cup, and they're using celebrity marketing, like with Ink Warrentorn, to boost the brand's appeal.
And other retail. Convenience stores.
Yep, expanding there too. They have over 2,300 7-Eleven and Jiffy convenience stores in Thailand. Plus, they're rolling out this found health and beauty retail concept. About 10 branches so far in Bangkok and other areas. The strategy seems clear. Leverage their huge network of locations, turn petrol stations into broader lifestyle destinations.
Makes sense. What about technology and digital? That seems crucial these days.
Absolutely, and OR seems to be taking it very seriously. They're talking about a deep commitment to digital transformation. They've developed a digital roadmap, apparently incorporating global tech trends for the next 5-10 years.
So not just tinkering around the edges.
Doesn't sound like it. They see it as fundamental. A concrete example just launched in July is their new Blue++ app. The idea is for this app to be the central hub for everything OR, connecting services, benefits, loyalty points across all their brands, fuel, coffee, convenience stores, everything.
An ecosystem app.
Exactly. The goal is to understand customers better, offer a more seamless experience, and ultimately build, a more engaged customer base beyond just transactions.
That definitely sounds like a forward-looking strategy. Okay, let's bring it back to the market. How is the stock being viewed right now? As we record this, August 8th, 2025, OR stock is trading around 12.70 Thai baht, maybe 12.50 for some after being down recently. What are the analysts saying? What are the price targets looking like?
Right, let's look at the consensus. The IAA consensus, pooling views from 17 brokers for their 2025 forecasts. It gives us a pretty clear range. The highest target price out there is 20.00 Thai baht.
Okay, quite optimistic.
Then the average target comes in at 15.24 Thai baht.
Middle of the road.
And the lowest target is 12.00 Thai baht.
So pretty close to where it's trading now at the low end.
Yeah. Overall, the sentiment leans slightly bullish if you combine buys and holds. About 70% are in that camp, with roughly 30% recommending sell. Specifically, it breaks down to 9 buy ratings, 3 hold, and 5 sell.
That's a really interesting spread. A good number of buys, but also a significant chunk of sells. Clearly, not everyone agrees on the path forward here. Let's dig into that a bit. Why the different views? Can we look at some specific recommendations and, crucially, the reasons behind them?
Yeah, absolutely. The divergence is quite telling. Let's start with one of the more cautious ones. Day Securities, Thailand. They're sticking with the sell recommendation and have a target price of 12.50 baht.
Okay, why so bearish?
Their main points are, Q2 profit was much lower than they expected, and they see higher business risks coming in the second half of 2025. Their target price is based on a PE ratio, price to earnings, for 2025 of 17.2 times. Now, the key thing they highlight is that this PE level is 2.75 standard deviations below the 5-year average PE for the retail group.
Okay, unpack that standard deviation bit. What does that mean in simple terms?
It basically means that even compared to how stocks in this sector usually trade relative to their earnings, they think OR is or should be valued lower than average right now due to those risks. or potentially still overvalued despite the drop. They've kept their profit forecast for 2025 and 2026 fairly low at 8.7 and 9.4 billion baht, basically saying they think the best quarter of the year is already behind us.
Got it. Who else?
Then you have Yuanta Securities, also from Thailand. They took a slightly more nuanced approach. They actually lowered their target price to 13.00 baht and changed their recommendation from buy down to speculative buy.
Speculative buy. So buy, but with caution.
Pretty much. Their reasoning overlaps a bit with Dow's. Q2 profit missed their forecast by 26%, which is a lot. They're also worried about SG&A expenses, selling, general, and admin costs staying stubbornly high. And like Dow, they expect Q3 profit to drop quarter over quarter, maybe to around 1.7 to 1.9 billion baht because of the low travel season.
So still cautious.
Yes, and they even suggest the stock only really becomes attractive if it falls below 11.50 baht. Their revised profit estimates are a bit higher than Dow's, but still cautious. 9.2 billion for 2025, 9.4 billion for 2026.
Okay, so that's the cautious side. What about the more optimistic analysts? Who's recommending buy?
Well, Trinity Securities is a good example on the bullish side. They're maintaining a buy recommendation, and their target price is significantly higher at 18.009 Thai.
18 buy. That's quite a difference from 12.5 or 13.0. What's their thinking?
Their target is based on a PE of 17 times, which they actually view as being one standard deviation below the average. So they see it as undervalued from that perspective. They do acknowledge the Q2 profit miss, of course. But they're keeping a much higher full-year profit estimate for 2025 around 13 billion baht. They point out that the first half profit already makes up 52% of their full-year forecast, so they believe the second half won't be as bad as others fear.
What's their main argument for the stock being undervalued?
Their key point is valuation. They emphasize that the current stock price is trading more than 2 standard deviations below the average for both its PE ratio and its price-to-book value ratio, or PBV.
So significantly cheaper than usual based on both earnings and assets.
That's their argument. For Trinity, this deep discount suggests the market is overly pessimistic, and the stock is an attractive buy at these levels.
Right, that's a fascinating contrast in views, all looking at the same company. So this brings up a really important point for you listening at home. How should you, as an investor, make sense of these different analyst opinions? One says sell, one says speculative buy, one says strong buy.
Yeah, it's crucial not to just take one report as the absolute truth. Analyst reports are models, they're based on assumptions about the future, and as we've just seen, those assumptions can differ wildly. The real value is in comparing them. Seeing what different analysts focus on, is it short-term headwinds, long-term strategy, valuation metrics. Understanding why they reach different conclusions helps you build a much more rounded picture of the risks and potential rewards.
So weigh the arguments yourself.
Exactly. Read their reasoning, see which assumptions seem most plausible to you, and use it to inform your own view, your own decision about the stock.
Good advice. Okay, moving beyond price targets, let's talk about dividends and the company's overall financial stability. What's OR's policy on paying dividends? Is it something shareholders can generally rely on?
OR does have a pretty clear dividend policy. They aim to pay out no less than 30% of their net profit each year after setting aside any legally required reserves.
30% minimum payout.
Yes. Now, the final annual dividend needs shareholder approval, but the board does have the power to approve interim dividends during the year, provided the company is actually making a profit. There are important conditions, of course. They can't pay dividends if it exceeds their retained earnings, and definitely no dividends if they have an accumulated loss on the books.
Makes sense. Protect the company's capital.
Right. And the board also considers the bigger picture when deciding. The economy, OR's own performance and financial health, cash flow needs, investment plans, any loan repayments, working capital requirements, basically ensuring the dividend is sustainable and doesn't jeopardize the company's future.
So it's not automatic, but there's a clear framework.
Exactly. It shows a commitment to returning value, but prudently. And just to give you some concrete examples, for the full fiscal year 2024, the total dividend was 0.40 Thai baht per share. That worked out to a payout ratio of about 63%, so well above that 30% minimum.
Right, a 60% payout.
And more recently, there was a payment of 0.13 baht per share paid out in late April 2025. Before that, 0.27 baht per share paid in September 2024. So there's a track record of payments when profitable.
That dividend yield definitely adds another dimension for investors. Now let's connect this back to financial health using those metrics we mentioned earlier, PE and EPS. How do they help us understand OR stability?
Well, these metrics give you different lenses to view the company's value and health. We already calculated the H1 2025 EPS at 0.55 Thai baht. That's your basic profitability per share. Now, the PE ratio, price to earnings, ORS, is currently around 17.8x. As a general guide, some investors think of PE as roughly how many years of earnings it might take to recoup your investment cost.
A payback period, kind of.
Loosely, yes. But the key here is context. InfoQuest noted OR's PE is about 2.7 standard deviations below the 5-year retail group average. As we heard from Trinity Securities, this deviation below the average suggests to some analysts that the stock might be undervalued compared to its peers in its own history.
So potentially cheap based on earnings.
Potentially, according to that metric and that interpretation. And then there's PBV, price to book value. This compares the market price to the company's net asset value on its books. It's often useful for asset-heavy companies like OR with all its stations and infrastructure.
Right, tangible assets.
And again, Trinity highlighted that OR's PBV is also trading well below 2 standard deviations below its historical average. This adds another layer to their undervaluation argument, suggesting the market price doesn't fully reflect the value of the company's assets.
So putting it together.
Well, when you see a consistent dividend policy, combined with metrics like PE and PBV suggesting potential undervaluation relative to history or peers, it can paint a picture of a company that, despite current challenges, might have underlying financial strength and the capacity to generate returns for shareholders over a longer term. These ratios give you snapshots to assess that stability.
It really seems like OR is at a bit of a crossroads, doesn't it? Facing clear headwinds in its traditional oil business, but making significant strategic pushes into lifestyle and digital to build a different kind of future. The analysts are definitely split on how quickly that transition will pay off, but the long-term vision seems clear, even if the execution risk is there. Finally, if there are any other stocks you'd like us to cover, please let us know. Don't forget to like, share, and subscribe to support our team. Thank you.